You set up your accounts within the Maintain Chart of Accounts window, which you can access by selecting Maintain, then Chart of Accounts from the menu bar. In this window, you will need to assign the account an account ID, a description, and then select the Other Current Assets account type from the Account Type dropdown. Let's take a prepaid rent account as an example. Suppose that your landlord requires a 6-month prepayment of the rent for your building. Also assume that you are going to be spending $1,000 per month on rent. You wouldn't want to write a check for $6,000 and then just apply it to the rent expense account, as that skews when the expense is actually being incurred within your balance sheet and other financial reports. Instead, you would want to track the amount paid to cover the next 6 months of rent in an Other Current Assets account, from which you will then deduct the amount of the rent when it is actually being incurred over the next 6 months. First off, you would need to create an Other Current Assets account called something like Prepaid Rent within the Maintain Chart of Accounts window. Then you would simply need to write the check to the landlord for the next 6 months of rent. However, instead of just attributing the amount of the check to the rent expense account, you want to show that it is actually increasing the value of the prepaid rent account. You are essentially trading a decrease to the selected cash or checking asset account for an increase to the prepaid rent asset account. This will then set the opening balance for the prepaid rent account. All you will have to do then is ensure that each following month, instead of writing a check for the rent, you decrease the value of the prepaid rent asset account and attribute the amount to the rent expense account at that time when it is actually incurred.